Ladies and gentlemen, fellow traders, I'm starting early today. We're getting on the road and we're getting started. The Fed's cut rates, and yeah, well, everyone's waiting for earnings season to go through, and Nvidia's going to the moon, and there's a comet heading towards the Earth. So everything's happening this week. Everything happened last week, and it's been an interesting time trading. Let's be fair, it's been quite an interesting time. Don't forget, trading's risky. Most traders lose money. If you don't like losing money, yeah, shouldn't be trading. I'm just going to take that out of the way. Today, we're actually going to talk a little bit about where the money's really made and how the money's really made. And we're going to go into a little bit of detail about that today, and we're going to talk about it once everybody's here. So I'm going to give a little bit of a story on how the money's made, the strategy, because it would appear there's a huge, massive, giant inability for people to listen. They don't seem to want to listen. Now look at gold. Look at where gold is going. Gold has gone through and it's come back down again, starting to come down again. So we got stopped out on gold as we took the short, and it went the other way because trading's 50-50. No one believes me when I tell them it's 50-50. Everyone thinks I'm talking rubbish. But yeah, there you go. You can have the perfect trade and it'll still go against you. And now it's starting to go back the other way again. And the S&P 500, I wonder if it's going to reach that 7,000, because it seems to have gone into the green, hit the 6.9, and it hasn't quite gone all the way, has it? So there's a question. Might come down to the support and then head on up. But, you know, because the markets are quite buoyant, let's be fair. I mean, everyone's quite happy. No one's like getting upset. This morning, I called the Australian dollar, United States dollar short. There you have it. It's going short. I was hoping this candle wouldn't be that long because I wanted the candle to close before I get into the trade here. But yeah, it's quite a long candle. It's going crazy. So I'll just wait a second to that one and just see what happens. Because we've had a bad week. I mean, we really took quite a knock on quite a few trades. The Brent crude oil, the gold, the Euro United, no, it was the Great British Pound, United States dollar, the Japanese yen turned against us. Look at that, turned against us. At least for a change, the South African rand's going in our favor. Look at that. At least that makes a change. Goodness me. So yeah, it's been an insane time as far as trading goes. Hello, Henny. Hello, Blue Mango. And hello, Fani. Good to see you guys. And I hope you're all surviving under the strains. It's been an interesting, like I say, tough week with regards to quite a few of the trades. And yeah, I've been, I've been looking at some of the trades, and you must remember, like on the cash accounts and that, it's not like these funded accounts. There's a lot more money involved there. So when things start going pear-shaped, it becomes a little bit more tricky. But, you know, like I always tell you guys, you're going to make more on the wins, you're going to lose less on the losses. So you can imagine if a $250 loss is $25,000, it does feel a little bit more pressured. But at the end of the day, you're targeting making $50,000 and $70,000 on those trades rather than losing $25,000. So think about that. What I have noticed recently in the market, in the video, in the YouTube situation where people are watching the videos and people are trying to learn and figure things out. What I've noticed recently, looking at the recent comments and whatnot, is a strong inability to listen. People don't listen. Now, I don't hold it against people because I myself took years to figure these things out, but it's an inability to listen or an inability to understand, or they just don't want to hear it, or they just don't want to understand it. You know, it's actually quite a strange thing that I find, and I think that people are coming to the videos on YouTube looking for another shiny charting system, and then they get something else that they actually don't want to believe. They find something else there rather than the shiny charting system that they were looking for. I mean, one of the more interesting comments that I got was, I tell people that charts are not as important, and then I go to the charts. That's like one of the stupidest comments that I've ever seen. There's a few of them. Because if you understand me and you know what I talk about with the strategy and whatnot, you'll have understood already that I've been telling people over and over and over again that you do need the charts to manage your trade, to get the trade, to pick your trades, and to try and get an edge one way or the other. Make you feel comfortable when you take the trade using your system. So you know, when I say you don't need the charts, you really don't. But we use them because they make us, or give us the ability to do that, to actually manage our trade, which is why I say, you know, I find it absolutely insane when people say that. But that just means, once again, an inability to listen or understand. They haven't gone, maybe they haven't gone through the whole video and actually watched the strategy, the actual important part, the part where the money's made. And that's what we're going to talk about today, where the money's made. And there does seem to be a lack of understanding. I think it's people are not hearing what they want to hear. I think when people go and they look for that new shiny system, when they go and they look for that new trader guru that they want to listen to, that person that's going to tell them they're going to buy a Lamborghini, I think what they're looking for is some confirmation of what they're thinking in their head. So if they don't hear what they want to hear, then they disagree, so to speak, or they don't think. So many people have said to me they don't agree with the 50-50. And, well, that in itself is, you know, that's going to, the sooner you can understand that you're going to lose more trades than you win, or that you're going to lose half your trades at least, or you've got to be an insanely good trader to win half your trades if you're targeting things properly and doing things right, the sooner you understand that, the sooner you'll become a profitable trader. But as long as you don't understand that, you're in trouble. You're not going to make it. And this is where one of the big issues come in. Sorry to say, but yeah, that's just where it is. But we'll get to where the real money is made shortly. We'll start talking about that when everybody's here, when we've got like the million viewers that we get every Tuesday and Thursday. Where are those million viewers? Come on watch the video, man. Anyway, a couple of comments like, for example, why after 30 years are you suddenly showing people how to trade? Well, no, I've been showing people how to trade all my career, actually. It's just that I've only got onto YouTube in the last couple of years, so, you know, it is what it is. I've had many a friend sit at the desk with me and I've showed them how to trade. So yeah, you got that one wrong as well. People just don't want to hear what they want to hear. I don't know, it's kind of strange, and I find it amusing at best. I don't know what kind of people they are, what we're dealing with, or if it's people that really want to know how to trade. But I'm finding a trend of people that don't seem to pick it up, or don't seem to get the gist of it. But it's okay. Maybe one day. Maybe one day. Boom, boom. Okay, Dave. I see Dave. Yeah. Okay, hi, Dave. From Wisconsin. Wow. That's brilliant. Lovely. Good to have you, Dave. I'm well, thanks, guys. Fani, Paul, Fani, glad it worked out. Always a 50-50, get back in again. Fani, yeah, our gold trade. Remember, I went in with you on the gold trade on Tuesday and dived in. You told me to go the other way, but I didn't. Yeah, I know, but I believed in it as well. And it was a good trade, Fani. It was a good trade. Nothing wrong. You did everything right. This is why trading's 50-50 as well. You know, when I say trading's 50-50, it's 50-50 on the charts. The strategy that we use, the strategy of keeping your losses the same and making more on your wins, that's not 50-50. That's your edge. That's where you're going to make your money at the end of the day. You're looking for those couple of trades every year that are going to run and going to make you serious money. But the charts are 50-50. There's no way a chart can predict the future, or you can, or anyone else can. I mean, these are not little crystal balls with little fortune tellers sitting there saying, give me some cards, I'll read the cards or something. I don't know. You know, this is a chart, and what you're doing is you're looking at the probability of what happened in the past will happen again in the future, as I always tell you guys, which makes it 50-50. Your whole setup can be perfect. Everything's right. Look at that. We take the short. Everything's going down. Everything's gone below the support. The red candles are in. Man, how can it go any other way but short? Guess what? Immediately, it goes the other way. It breaks through trend resistance, and it takes out the stop loss, which is why we have a stop loss. which is why we have a system in strategy in place, which is why we protect our trades, which is why we manage our trades. So we manage our trades on the charts. We manage our trades on the charts. So that's why it's insanity for those people who say, you say the charts aren't important, but then you go to the charts. Yeah, duh. The charts don't make you the money. The charts aren't going to predict the future, but you use them as a tool. Just like you would use a spanner if you were a mechanic, or you might use a multimeter if you were an electrician, or a scalpel if you were a doctor. I mean, if you were a doctor and you knew all about being a doctor and you knew how you were going to fix the person, you wouldn't dig in there with your bare hands now, would you? You'd use a scalpel. Do you know what a scalpel is? It's a tool. It's a tool that you use to cut the person open, get in there and fix the heart. But you know how to do it, and you've got a strategy on how you're going to do it, but you can't do it without the scalpel. So that's what the charts are. They're a tool. They're just a tool, a means to an end, something you can use to draw a line on and decide whether I'm going long, whether I'm going short, where I'm buying, where I'm selling, what I'm doing. That's what the charts are for. The charts are there to help you with your trade. They're not there to make you the money. This is where the mistake is coming in. This is where the correction is coming in. But I'm going to get onto the training in a little minute as well. We're going to get onto the chat about how this works. I know my face is in the way, and I need to take it out the way. So I'm going to do that, and then we can have a look at the charts. Sorry, guys. And now maybe you can see the gold trade a little bit better, because I was actually leaving my face there because we're talking a little bit, but you know, we need to see the charts as well. So here's the charts. There you go. There's the charts. Look at the charts. Lovely stuff. Okay. Now, let's see. Where are we? S&P, little green dot. Euro, United States dollar. Okay, coming down a bit. Gold we had a look at now. Brent crude oil is an interesting one. Waiting to see whether it will break to the upside or go down again. And I do like the United States dollar, South African rand going in our favor for a change. Looks like it might actually go the right way. It's been a while. If that one goes right, that'll be great. Take some profit off that. Like I said, I was looking at the short on the Australian dollar, United States dollar earlier. So yes, we've got a new candle now. So it looks like we might be able to get into that as a short. So that might actually be a good short. So let's take the Australian dollar, United States dollar short. On this account, I'll have a look. Stop loss. How many? Yeah, that's fine. 0.5 lots, but we need to see stop loss would be at 0.66400. Did something happen to my thing there? That's kind of weird when that happens. Getting up on 0.66400, which would give us quite a big stop loss. We don't want that. Make it 0.2 lots. 600. 0.25 lots. 0.3 lots. Yeah, that looks 250. That's fine. That'll do fine. Take profit 0.64836. Is it worth my while taking this trade? If you get 64423, which was the lower one. Okay. Even if it's 1-to-1, we'll take the trade. It's okay. Looks like a reasonable trade. Okay. Take it now. All right, guys, we'll add that trade in. We'll get to the trading in a moment. We'll just take that trade. Hello, Greg. Good to see you. And Fani is still here. Nick. After fast, large up moves, the pullbacks are muted because of the emotional FOMO factor. Fear of missing out is a biggie. That's one of the big calls. And it's actually one of the big issues in the market at the moment. Let's get on with some of the training. And we can talk about the other stuff and what trades we're taking a little bit later on. We've been here for a few minutes now, so I think we can get on with it. And I have chatted to you at length about a few of the other things. I'm just going to make my picture a little bit bigger here, and I'm just going to just have a look here, and let's talk about where is the real money made in the markets. And this is one of the big issues, and this is what I've been going on and on and on about. You know, the charts don't make you money in the market, and going back to the charts, and people say, oh, you say you don't need the charts, and then you go back to the charts. But you do need the charts to manage your trade, to manage your risk, to control that risk, so that you can draw a line and you can see if you're going that way or that way on the chart. And so it's a tool. And as I said earlier, the thing about a tool is, if you were a doctor, you would understand your strategy. If you're going to go and do open heart surgery or brain surgery or something to that effect, you'd know exactly how you're going to do it. You know exactly where you're going to start and where you're going to end. But you couldn't just dig in there with your bare hands. You need a tool to do it. Then the tool that you would use would be a scalpel, so you could get in there and start fixing that person. So that's what you would do if you were a doctor. So if you're a trader and you just, you know, like blind in the sky, you know that trading's 50-50. You know the strategy is to make more on your wins and lose less on your losses. We've done all this. We've got all this information. But we say, oh, but you said you don't need the charts, but you don't need the charts to make money, but you do need the charts to get into the strategy and make the money with it, and to apply your strategy. So what are the charts? The charts are a means to an end. They're a tool. They're a tool. What I'm trying to get across to you is, don't use the charts as a profit base, or as I'm going to make my profit from the charts. Because I keep saying, there's a lot of people out there that disagree with me on this. A win rate cannot make you money. The money is not made in a win rate, ever. You cannot make money in a win rate. The money is not made by charts predicting the future. The money is not made by you or I predicting the future. Every time you take a trade, no matter how good the setup, you got the perfect setup. You're looking at that. This is the best setup in the world. It can't go wrong. I mean, on Tuesday, Fonny and I looked at the gold trade. It looked fantastic. It looked like such a good trade. Take it short. Boom, it goes against you. 50-50. You don't know when it's going to go against you, which is what makes it 50-50. Did you know that if you find the trader in the market that's trading properly, with proper targets, with proper stop losses and proper trade management, and doing it the right way, if he's a 6 out of 10 trader, or she's a 6 out of 10 trader, you're dealing with one of the best traders on the market. And there are very few and far between. There's not many of those traders floating around waiting to pop up and just show you how to trade or do some trading. Most traders actually don't have a good win rate in the market. Most professional traders, most institutional traders, most traders who make money in the market on leverage trading. Just remember, we're talking about leverage trading here. Please don't confuse this with investing. Investing is a completely different ballgame and has got nothing to do with what I'm talking about here. Investing, you set and forget. It's time in the market. It's got nothing to do with trading. Don't mix the word trading up with investing. Investing is a different thing. It's spot investing. You're trading one-to-one on your money. You're investing one-to-one on your money, and you're hoping that that share is going to go up in time, perhaps over the next 30 years. But that's a completely different ballgame. Whereas leverage trading, that's different. And this is where the confusion maybe sometimes comes in with win rate. Maybe sometimes people think, but I don't lose. Yeah, well, you don't if you're investing. But if you leverage trading, you do. I had one person actually turn around to me once and say, yeah, but I don't need a stop loss because the price always cycles back around and makes me the money anyway. And yeah, well, that's interesting, because I've even seen in Forex, in many cases, where the price has taken a couple of years to get back to the level that it was before it started falling or climbing. So don't rely on that either. That's not going to help you. You can't sit in leverage trading in a trade for 2 years waiting for the market to come back to you. How much money do you have in your pocket to hold on to that drawdown for that length of period? And that's where you also don't get confused by people saying, ooh, I made $150,000 today. You didn't make that with $1,000. You made that by having $500,000 in the account in the first place. You know, the risk amount that you take is relative to the size of the account. And like I say, you risk 1% of the account. So if you have a $25,000 account, you're risking $250. You've got a $25 million account. Well, you know, that's kind of a different ballgame. Maybe you're risking $250,000. So that becomes a different ballgame, and it also becomes a different risk factor, and it also becomes a different psychology. So where is the real money made? Is it made with more wins? No. Is it made with consistent wins? No. Is it made with great win rates? No, it's not. Smart traders know how to position themselves in the market. It's not consistency. It's patience. It's just simple patience. And I see now that that the charts have just disappeared. So I'm just going to reload them and put them back up. For whatever reason, I see we've been having lots of internet problems over the last couple of days, which has affected things immensely. But you see, the thing is, professional traders, top traders, understand that you cannot win them all. You know all about the video with the turtle traders. I've told you about the turtle traders over and over again. The turtle traders, they always only had a 20 or 30% win rate, and they made the most money that anyone had ever made on the stock market simply by following a strategy. The strategy that I give you guys on a regular basis, and that is keep your losses the same on every single trade, or as close as possible. So risk the same percentage on every single trade of the total account. Don't change the account size. Keep the account size the same, whether it goes down or up. If you choose an account size, use that as your baseline, and then work off that baseline. So if it's $25,000, you're risking $250 if you're risking 1%, and then you keep that the same on every one, and you try and make more on your wins. And that's the simple basis of it. At the end of the day, that's where the money's made. The money's made in the strategy. The money is not made in the charts. The money is made in the strategy only. So when we talk about trading and we talk about making money and we talk about systems and strategy, for me, the word strategy applies to that business plan that's going to make you the money at the end of the day. When I say you don't need the charts to make the money, what I mean is you need the strategy to make the money. But the charts are a tool. They're like the scalpel that you might need one day if you're a doctor working on a patient, something like that. Everybody needs their tools in every trade. And as a trader, we make these tools work for us. And that's what we love about having the internet, having these computers, and having all this information on hand and being able to take a trade at that click of a button. Amazing, isn't it? That's a tool. You need a mouse, or you need a phone, or you need something to take the trade and to sell the trade. That's another tool that you need. You can't be without it. You can't be without the button to buy and sell the trade. But that's not what makes you the money. That's not the bit that makes you the money. That's the tool that allows you to buy and sell. Just like the charts are a tool that allow you to manage the trade. It's just a tool. It's not what's going to make you the money. The markets are 50-50. There's no way you're going to get around that. There's no way you're going to change it. And the reason they're 50-50 is because we're human beings. We're not charts. We're not lines. We're not bots. We're not algorithms. We haven't become AI yet. Maybe we will one day, but we haven't become AI yet. Any AI in the market is still controlled by a human being. A human being is still controlling whatever program is running in the background to buy and sell shares. So those are irrelevant as well. Everything you buy and sell in the market is sold between two human beings or two businesses or two institutions, not between two robots. So when you're buying and selling, it's a bit like when you have a for sale sign outside your shop or a sale board that says, oh, for sale. That's like your stop loss or your take profit. And I come along and I want to buy it, then I grab it and take it and say, someone's watching, they're taking out my stop loss. No, actually you advertised your stock for sale. And I came along and I bought it because it seemed like a good price to me, because I'm on the opposite side of the trade to you. Get that? So how can the market not be 50-50? If you believe it's a buy, I believe it's a sell, or I believe it's a buy, and you believe it's a sell. How can the market not be 50-50 if that's the case? Surely that's what makes a market. If the market was a perfect scenario where everybody knew when to buy, everybody knew when to sell, then you wouldn't have a market. In fact, the market would lie on zero. There wouldn't be any market whatsoever, because we would all be buying or we'd all be selling at the same time, wouldn't we? Anyway, that's today's rant. I hope that helps you guys. I hope that I'm going to take my little face out the way so we can have a look at some of the charts. And I do hope that helps somebody somewhere down the line. And if there's any questions, feel free to throw them onto this big chat here. There's a big chat here. And I see you get a little purple thing with a crown next to your name that says how many chats you've got on. And it's all great. Guys, feel free to ask questions. But I had to give that subject matter attention today because I noticed once again, and I haven't seen it for quite a while, but I noticed once again quite a lot of the comments were stating that they don't believe in the 50-50, they don't believe in that win rate doesn't make them money, they don't believe what they're seeing because they want to hear something different. They obviously want to hear that the market's just going to pour money into their lap, that they're just going to be able to take $1,000, get into the market and become a millionaire. That's most likely what people want to hear, but that's not what they're hearing from me. And that's probably upsetting the apple cart a little bit. But there's nothing I can do about that. You know, the apple cart is what it is. But I'm trying my best to help people where I can. So, if you got any questions, feel free. Okay. Dave, I'm so glad you are able to be here live with everyone. And every live show I try nowadays and give you guys a bit of a value. In other words, a little bit of training in every live video, not just me sitting here playing around with charts and talking a lot of rubbish about the market, rather something of value and a little bit of training. So yeah, hopefully that is what you like and it's worth it to you. And happy Thursday to you as well, Elaine. And guess what? Tomorrow's Friday. Cheers. There was a time when I didn't like weekends because I just wanted to get back to my trading. These days I don't mind. It's nice to take a bit of time out. Yeah, so I see there's no questions and I see you guys all understand the strategy 100% and everybody's perfect on that. But, you know, you guys that come to the live show are actually the A-team. You're quite a crowd. You guys are like-minded traders and you are going along the journey. So I suppose, unfortunately, you guys are not the guys that need to hear that. But it's good for you to hear it and to reiterate and for me to go over it so that you don't, you know, go astray. Go astray and start thinking, ooh, the charts are making me money. Yeah, no, it's quite crazy. People don't think sometimes, or they don't just, you know, put their mind to things or don't listen. And then they fall short from that, unfortunately, because if you just listen and you just take in what's being said, you can learn a lot every day. Also, you know, when I was younger, I had old men telling me these stories and I would think, they don't know what they're talking about, these old toppies. Wish I'd listened sometimes because I would have got the idea a lot earlier than I did. And that's where the problem actually comes in. One of the biggest one, and somebody actually said to me in a comment as well that they don't like these aphorisms or whatever you call it. There's a big name for it, where people say time in the market is the only way you can make money and all this. Well, unfortunately, facts are facts. It's not an aphorism or whatever you're calling it. It's the truth. It is what it is. Markets don't change. You know, it's funny. Well, people come to YouTube or to courses or to people and trying to find a shiny new tool. They're thinking that something's going to change in the market, or something's going to change in the buying and selling of the market, or there's going to be something new. But there's never something new. What people are not understanding is you're not looking for a shiny new tool. What you're looking for is understanding. You're looking for understanding. When you go out there and you look for help with your career, whatever it might be, whether it be a doctor, a lawyer, or a trader, you're going out there with a view to finding more understanding about that career, about the best way you can approach it and the best way you can make a profit from it, or the best way you can do it the best way possible and do it right. You're not going out there to actually try and find shiny new tools. You're actually going out there to try and understand how you can get it right. That's a big thing. It's a big mind switch, okay? To be like, oh, I'm trading, I know what I'm doing. I'm going to go out there and I look for this tool. I'm going to look for that tool. I'm going to look for this. I'm going to look for that. But instead of doing that, start switching your mindset to, I'm actually looking for new understanding. I'm looking for an understanding of how I can do this job better. And then it'll be a different ball game for you. Euro, US dollar, good, going crazy. David from Mark, good to see you, man. How's it, David? Lucky to see you again. And I just want to see Euro, US dollar. The Euro US dollar is dropping, but there's a good reason for it. You can see clearly here it's in a range. It's in a bearish trend range. Sorry, there is a range to the side as well, but there's a bearish trend to it. And there's a trend resistance, there's a trend support. Gets to the top of the trend, comes to the bottom of the trend, goes to the top of the trend, and then I suppose it could come to the bottom of the trend now. It didn't break out, it didn't counter, so you're still in that trend. So it's just staying in the trend. So I wouldn't call it going crazy. I'd call it, this is just normal. It's going to come down, probably come all the way down and then go all the way back up again. It could stop here. There is a support here. There's a big support lying at this level and also at this level of 115.4. There's a double bottom there which left the bottom. So it might stop there as well and then bounce up. You don't know. You can't predict it. You can only look at it and say, well, there's all possibility of that. But had it broken out, that would have been a fantastic trade if it had broken to the upside. With it coming down, I'm not sure how far it can come down. So it leaves me in a bit of a quandary with the Euro United States dollar. So that's no trade, because I'm not sure if it'll make it past this 115.4 or not, because there is a holding pattern here. And if I take this trade, my risk to reward is poor. Always think about your risk to reward, because our whole strategy is based on risk. The whole strategy is based on making more on the wins. And if you take this trade to the short side, the target could possibly just be here and the risk is all the way up here, which means the risk becomes now more than your reward. Yes, the reward could be down here. It could be much further down. It could be right at the bottom, down there with old Lucy. But if it's not, if it's there, then your risk to reward is poor. So I'm looking at this trade as kind of like iffy. And yeah, so obviously the tool is telling me, the scalpel is telling me, do be careful. You might not get a good trade out of this, but it does look like it wants to go down in the trend. So Euro US dollar is working that way. I had a short on the United States dollar Japanese yen because I'm a firm believer in fundamentals as well. And the fundamentals on the Japanese yen, as I've told you guys before, are very simple. And that is the Japanese government does not like it when it's over 150. So they will do everything that they possibly can to push this back down again. This is going to be another fantastic short, even though I lost money on it this week because I took the short and it turned against me. But as it broke through and it broke out and it got out, I actually took the loss early. Remember, you can take your losses early, but you can't take your profits early. The profits you want to run. You want to run your profits for as long as you can. Push the stop loss up behind them if you can. And if they get taken out early, then that's, well, it's just one of those things. But don't click out of them. But stops, if it's going bad and it's early, get out, take the smallest loss you possibly can if the trade looks invalid. So that's what we did here. We didn't take the full 270 or 260 it was. I think I got out at 160 or 170 or something. Still a reasonably sized loss, but less than it should have been. And that would have gone much, 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 much further if there was no stop loss, probably would have blown the account, in fact. So that is great, because now I'm looking at a fantastic situation of the higher this goes, the better, because when it turns around, it's going to come back hard. So keeping my eyes on that trade is fundamentally the Japanese do not like that above 150. I know that. It's the same as my South African Rand trade that I keep getting flattened on. And that is, I know that this currency is supposed to be weak, so there's no reason for it to get stronger. And every time I take it, it seems to nail me. It owes me big time, so it can pay me. You know, there was a time when I used to trade shares, not investing in shares. That's different. I mean, you invest in shares, you leave them there, you make money. It's great. Okay. I stopped trading them and just left them as investments now. But I was leverage trading shares, and I would literally buy the oil companies with a view to that will pay for my fuel in my cars. And you know, that's the mentality that you start to get when you're trading like that. Okay, so we took the Australian dollar today. The Australian dollar today we looked at. It looked like a good trade. Why did we take this trade? Pretty simple, really. It came off the resistance. This is the daily resistance. It's in a range. Okay, so that's a daily resistance level. Here's a daily support level. But we're on the 4-hour chart. We go back to the 4-hour chart. I'm looking at it, and then I draw in this trend support. The trend support, so it's come off the resistance. It's gone through the trend support, which is the biggie. It's given us a green candle signal, and we've taken the short based on that. And now we've got another, red candle signal, sorry. Red candle signal closed. Next candle, take the trade, and that one's developed into a red candle as well. There's also a nice gap waiting at the bottom here, which could be filled as well. So that's looks like a reasonable trade, unless it does the same thing as the other trades have done to me this week and decide to prove me wrong, which does happen from time to time. But hey, what can you do, eh? Okay. Blue Mango says, Rob, I take entries on the 15-minute charts. It's so difficult to see half your profits taken back by pullback and then stay in the trade, like what happened on Go the last few hours. Nick, there was a paper that showed that mean reversion worked great with most currency pairs. The only exception was the Japanese yen. It's interesting. One of the things I look at is, currency pairs are cyclical. So are commodities, effectively. It depends how deep your pockets are with that. I prefer to take the stop losses and move on and come back on another day, because the moves can be quite insane. But yeah, the Japanese yen I'm looking at fundamentally. I'm looking at it from a fundamental perspective as well. I wouldn't touch the short on it now, because it's a lamp pole formation. I've told you guys the lamp pole formation. Lamp pole goes straight up. So like any lamp pole. And what can a lamp pole do? When it comes down, it falls over like a stone. It comes falling over and it crashes down. So it's a lamp pole formation. So you wait for it to turn around and come back before you do anything with it. Taking your entries on the 15-minute is a bit like trading on the 5-minute. You're trading on a lower time frame, no matter what you're doing. Okay. Now I get it, because trading on lower time frames most certainly keeps you busy. Now, one of the biggest reasons for people trading on the lower time frames is because you want to make money quickly, because you don't have the patience to make money slowly, because you want to make it today and you want to make it as fast as possible. And I get that. There's a lot of people out there that get into it for that. The other reason is boredom. And the other, trading is a very lonely game. So you get into trading and you find yourself by yourself, unless of course you're an institutional trader or something like that, and you can get yourself into a trading office and there's a whole lot of other traders and whatnot, and you can go to lunch with them and stuff. That's different. But if you're in it for yourself, you'll find yourself in your office by yourself trading on your own, unless of course you're doing it as a sideline and you've got another kind of work. That's different. But if you're only trading, then it's a lonely place to be. Buck stops here as well. You have to make those decisions. And unless you've got some like-minded traders to chat to, or to be on a group with you, or a Telegram or a WhatsApp or something like that, that keep your mind focused a little bit, then you're going to find yourself out there all alone. And if you're on slow trading and you're trying to watch charts, then it becomes insanely boring. So I don't watch charts anymore. In fact, I haven't watched charts for a very long time. Look, let me be fair. Obviously, I watch charts sometimes. I'll sit and look at charts and I go through them and I check, I want to take a trade here, take a trade there. But once I've taken my trades, I don't sit there and just watch this going up and down. I don't sit there and watch this line. And there's a good reason I do that. And that is because if I watch it, I will tend to make mistakes. I will tend to trade in and out of the trade at the wrong time because it's going against me or going for me. I'll tend to do silly things. So it's better if I position my trade and leave and walk away and let it do its own thing. To be fair, that's the best way. Because if you don't, you're going to see a big line and then you're going to take action based on that. It's a bit like if you're trying to trade and listening to the Fed talking and the markets are jumping up and down. It's a bit like that. So what most traders end up doing, because of the FOMO, because of the impatience, and because of the maybe I like the understanding is not 100% on this, but what you end up doing is you end up going to the lower time frames because you're bored. Sometimes, like I say, it's because you need to make money quickly, but mostly it's because you're bored. And then you start trading on faster time frames. Now, what you've got to look at is your sample size on lower time frames is small, and your sample size on larger time frames is big. So you've got more room to maneuver on your larger time frames. You've got more space to maneuver. If you're trading the same amount of money, so let's say you're trading $1,000 on a 4-hour chart, and I'm talking about your stop, your risk, okay? Let's say you're trading your $1,000 on a 4-hour chart, or you're trading your $1,000 on the 5-minute chart. If you're trading the same amount, you can lose that $1,000 in 7 points or pips or pairs or 10, okay? And on the 4-hour chart, it might be 200 points, contracts or pairs or something like that, okay? Pips or whatever. So the difference in size is huge. And the sample size for your information is also huge. Now, I understand that you've taken your analysis from the higher time frame. The market's bullish, it's going up, so I'm going to buy on the shorter time frame. But when you do that, your movement is taking you out, because when you take the trade on the higher time frame, the movement is clean, it's fair. You've given yourself enough room in that trade. So in other words, if it goes against you slightly, you draw down, it doesn't matter, you're going to get that movement before it takes off. But now you take that information down to a 5-minute chart or a 15-minute chart, and you take the trade there. And the trade moves slightly the other way, because that's what it does. It moves around. This is why people struggle on the lower time frames, by the way. It moves around on that lower time frame. Oof, it takes you out. It takes you out very quickly. So the only way that you can actually use the lower time frames to your benefit is for what I call a sniper trade. In other words, you're going to trade on the 4-hour or the 1-hour chart on a longer period with a stop loss and everything based at that distance, but you're going to use the 15-minute to get into the trade, to look for the entry point. But then you're going to trade it as a 4-hour trade with lots of distance on the trade. You've got to remember that the information that you're getting off the higher time frames is that much more reliable. But it's going to move around. There's going to be some play, some slippage. There's no way that it's going to be perfect. There's no trade that you can take and go, I'm buying this, and it just goes in your favor. You know, most of the trades that I've taken over my years, that's a long time, most of them, the minute you take the trade, it goes against you. And then hours later, it starts working in your favor, or maybe the next day or whatever. For whatever reason, that's how it works. Okay. So if you're going to try and take it down to a lower time frame, in all likelihood, you're going to get taken out. Now, it also doesn't work for you to go to the lower time frame and try and trade smaller amounts. Because people say, well, then I won't trade the whole $1,000. I'll trade $100 or $10 or whatever. Let's say $100 instead of $1,000. So I'll just start trading at $100. When it goes in my favor, I'll make it 200. Then I'll make it, I'll make the trade bigger as I go. The problem with that is you start on the $100, okay, and the trade immediately works for you and goes in your favor. You're only going to make the profit on the $100 when you could have made it on the $1,000. But if it goes against you, then you're going to start adding to the trade, adding to the trade, adding to the trade, dollar cost averaging out of the trade until the $1,000 trade, and then go back and get out at zero. So that doesn't work either. You have to trade the full amount if you're going to trade on the lower time frames. So that kind of doesn't balance out either. Yeah, okay, so that's a whole lot of information for you. Where were we? Okay. So if you're on a prop firm, what's the best time frame to trade with? Because you have to be out of the trade a certain time each day. That depends on the prop firm. That totally depends on the prop firm. These prop firms that I'm using here to show you guys how to trade, I can't even remember the name of them. Fund Your FX, Fund the Trader Markets. The links are in the description. These ones don't require you to be out of the trade at the end of the day. They require you can do what you want. But understand this, okay? And maybe what you're thinking is this, I don't know. But even with contracts for difference, or if you have a brokerage account which is leveraged on cash, my cash accounts are the same. Every night they cash up, like you would do with a business. When you cash up your till, you cash it up, you count all the money, you go home, you leave a float, you come back tomorrow morning, you put all the money back in the till, and then, or you put money in the float in the till, and you start your business day. At the end of the day, you cash up, you take all the money out, and off you go. And this is what contract brokers do. Or brokers that offer you futures, brokers that offer you leverage trading. At the end of the day, what they effectively do is cash your trades out and in. But they allow you to stay in your trade overnight and carry on tomorrow morning. So they don't take you out of the trade effectively. What they do is they keep you on a running trade, but they charge you every single day for cashing in and out of the trade. So keep that in mind. Maybe that's what they're doing to you. Maybe that's what you're thinking of, all right? And the prop firms will do the same thing. They'll cash you in and out of your trade every day, but that doesn't mean your trade won't run. That doesn't mean you can't stay in the trade and keep running the trade. I don't know what prop firm you're with. Every prop firm's got their own silly rules. And like I say, up until last year, I had no time for prop firms. It's only this year that I started to warm to them, in the sense that I thought, well, it helps a lot of people, because I realized there's a lot of people out there that don't just have $100,000 floating around, or $200,000 or $1 million or whatever. Most of the people that I've spoken to that are getting into the market have maybe got $1,000, $5,000 or $10,000. They don't have the money or the capital to get into the market with, but they want to get into the market. So the only way to do that, and then I realized there's a good way to do that, and that is if you use a prop firm. I don't say trust them. I don't say trust them with everything. Just all I say is they're a means to an end. They're a useful tool for you to get into the market and trade with some capital, and have some capital to trade with. It also teaches you discipline. It also teaches you the psychology of trading, because you've got some real money at risk, not just any money. But when you get to your real cash and leverage trading, and it's large sums of money and it's your own money, there is a difference in fear levels. And I think I've mentioned that to you guys before. There is a difference in fear levels. So just keep that in mind when you're trading as well, because there's more to lose when it's your last money than there is when it's like a prop firm or something like that. Random channel says, should we trade any asset? Yes, you trade anything you want. If there's orange peels to be traded, please trade orange peels. The other thing, random, is just for information. I'm not a big fan of, for example, terminology, calling things by their names and little abbreviations and things like that. But the one thing I do see is a lot of people calling the indexes futures. Okay, futures are everything you see that you're trading in leverage trading. The futures are, they're in Forex, commodities, indexes. Futures are a thing, okay? They're a living thing like contracts, right? In fact, brokers buy futures to sell you contracts for difference if you're trading contracts. The whole prop firm scenario of the information that you've got here is based off those futures. So futures are not like, say, an index or something like that. Futures are an entire, you can trade futures on a number of different products, okay? So the products are index, commodities, Forex, crypto. Those are your things that you can trade. You can trade orange peels these days, even orange juice or whatever the case. But yeah, like I say, that's what you're trading. And yes, trade everything, trade anything, trade absolutely anything. Then if you want to start trading, for example, futures, bonds, and different types of trading, okay, contracts, if you want to do investing and spot and all that sort of stuff, just look at the liquidity, look at the amount of money you're trading, look at, will I make a profit, will I be able to get in and out, will it be worthwhile to me? For example, bonds and things like that might not be worthwhile to you. I don't bother trading them because they're just not going to make me the money that I expect. There's a number of things to look at, and also your psychology can't trade everything. I mean, you've only got two hands. If you were an octopus, maybe, or if you had a whole bunch of employees, maybe. But if you're trading by yourself, try and focus a little bit. Keep your mind open to being able to trade anything, but try and focus a little bit. For example, even the commodities. I don't, for example, trade palladium because I feel that it just doesn't have the liquidity for me. So I don't bother with it. I'd rather trade gold or something else, okay? So copper, you know, these little ones, I look at them and think, I can't be bothered with the liquidity situation. Sugar, why would I trade sugar if the swaps are too far apart and there's no liquidity? So keep that in mind as well. So focus is not a bad thing, but keep your mind open to being able to trade something else. So for example, in the market, and this is where people go wrong, is they don't keep their mind open. Copper comes along and you can see this is just a dead ringer. This is a trade to die for. You've got to take this trade. Copper's going to fly. We all know it's going to fly. And then you say, I don't trade copper, so I'm not going to trade it. That's not the way to look at the world. You've got to be open to everything. So if it comes along and it looks great, then give it a go. You know, there's nothing wrong with it. What you have to understand is that they're all the same, and the strategy applies to everything. The strategy is not going to change. You want to make more on your wins and lose less on your losses. That's not going to change no matter what you trade. If you trade human beings, it's not going to change, is it? It's all going to be the same. So the strategy is always going to be the same. Make a profit. Think like a businessman. Don't think like a trader. Think like a businessman. I want to make a profit. That's how you got to think. Start thinking more like a businessman than a trader, perhaps. That might help. But yeah, that's the point. And even the charts, that's not going to change. Whether you're trading Forex, whether you're trading crypto, whether you're trading indexes, or whether you're trading commodities, it really doesn't matter. The charts are always going to be the same. They're always going to go up and down. The only difference is going to be that we all know that indexes are indefinitely going to go up the long way, mostly. They will come down, but only for a short period, and then they'll continue on up. Whereas Forex, we know, will go up and down, cyclical. It will go up and down. The question is, how long can you wait for it to come back around? So that's the difference. Okay. Volume trading, I don't do anymore. I don't waste my time with it because the amount of time that I've needed volume is very remote. Like most indicators that I don't trade with. There's a whole bunch of indicators here that I could put on here, and then I wouldn't be able to see my charts. They'd disappear. I would be like, oh, where's my charts? Because I'd have all these indicators all over the place. and I could use all of them, and then I'd end up trading against myself because one would say buy and the other one would say sell. So that becomes complicated as well. So yes, no, I don't bother with volume anymore because the amount of times it was useful to me was remote. It's a bit like divergence, you know, the amount of times it was useful to me was here and there and never. So I don't bother with it. Yes, you can use volume. Volume tells you if the move is genuine or not. If it's a good move, it's a bad move. It's not gonna make the difference in your trading. It really isn't. It might, but charts don't make you money, and volume's not going to make you money either. All it's going to tell you is all the traders have climbed in, and the price is moving the right way, and everything is fine. And well, you probably would have heard that if you had your ear to the ground on the fundamentals anyway. You know, it's much of a muchness. Yeah, I think I answered your question there, the random channel. Why don't you recommend the volume profile? There you go. I think I answered your question there. It's kind of always just been a waste of time for me. I used to always have every single chart I had volume at the bottom, but then I also had the RSI and stochastic and everything else on there, you know, MACD, a whole lot. But the volume profile, the amount of times it's been useful to me, I look at that in my trading. Okay, my personal opinion. For you, it might be different. For you, it might be the most important thing in your trading. But for me, I look at things and I say, I've used this tool, and how useful has it been to me? Because it's on my chart and it's in my way. How many times have I used it this week? How many times have I used it this month? How many times has it actually made me change my mind in a trade? And if the answer's like almost never, then it's gone. It's a waste of my time. I'm not going to use it. Why bother? You know, it might catch that one trade somewhere, I don't know, maybe, and say, don't trade that. But yeah, but then I'm sitting with all this stuff all over my charts, so I don't bother. Yeah, and the RSI I still use till today. I mean, the big institutions use it as well. The pros use it all the time. So the RSI I'll still use till today, but I won't leave it on the chart. Only if I'm sort of like, I need a bit of confirmation. If I'm looking at a trade and thinking, should I or shouldn't I? And I'll put the RSI on and just see what that says as well, and maybe, and then confuse myself, you know. But yeah. And volume profile, I mean, I can do a whole video on volume profile for you guys. But there as well, I mean, if I'm really thinking, is that a real move? Is that something I should be looking at? It's a click of a button and I can put the volume profile on and just have a look and just see, you know, does it look real or not? And it's as simple as it gets. But it's not something I bother with. That's why I don't put it on. What prop firm you got there, Bada Boom? Not that I want to promote any prop firms as such on here or whatever, but you're welcome to tell us. It's interesting to know because I haven't dealt with any prop firms that trade you out at the end of every day, because that's a bit rough, eh? That's a bit annoying, actually. I wouldn't actually take that kind of trade because it doesn't trade to my style. And I don't like it. That's actually, to me, sounds like they're forcing you to trade on the lower time frames, and they're forcing you to trade out every day. And it sounds like to me like they found a way to make you lose because they know you're going to lose doing that, and they're going to take your money. Maybe look for a different prop firm and just find one that doesn't do that. And I've got a couple in the description as well, but if you want to look for something else, more than welcome. Not a big deal to me. I'm just, you know, trying to help. But my personal opinion, I won't trade with a prop firm that has that rule. I'm sorry, I won't do that because I'm used to trading with cash. Okay, so now my cash account, I can trade and I can leave it for weeks if I want to, and come back and just trade it in and out and do my thing like a normal trader. Now I come along and they put that rule in front of me, and I'll be like, no, that's just going to mess me around. I won't bother. I won't do it. No. Take profit trader. Interesting. Okay. I'll know to stay away from them. Okay. Cool. I won't trade with a company like that. It's just I don't like that kind of thing. That is, to me, that sounds to me like they're just trying to make you lose. They're not giving you the chance to win. And look, I'm still not, even though we're trading with prop firm accounts here and using them for the training and stuff like that. And the main reason I do that is because I don't want to put a cash account online, because there's so many scammers out there and people trying to get your bank account details and all that sort of thing that I just don't do it. Okay, so I put up these prop firm accounts and things like that, but I'm still not the greatest fan of it. But yeah, it's a means to an end for a lot of people, and it's useful. And yeah, I get it. Totally get it. Totally get it. Ooh. It's like one guy asked me the other day, show me your trading account. I was like, yeah, show me your bank account. That's it for that. No worries. Give me your bank account number, and while you're there, give me your PIN number as well, man. I'll go and have a nice restaurant meal. It's like ridiculous. Absolute rubbish. Certainly. Well, I've been ranting on for quite a while, eh? Although I don't do recommendations as such, because that'll blow up in my face when it goes wrong. But I do have a couple of links in the description. I think 3 prop firms down there. Go and have a look at them. Go and click on that. It's right at the top of the description. Go and have a look at them and see if they suit you, if that'll work for you. The reason I have those links there is because they work along the same lines that I do. They don't give me too much hassle, too many rules. There's drawdown rules, and obviously you can only lose so much in a day or so much on a total account. So you've got to follow those rules. But you can leave your trades, and you can trade overnight, you can trade over the weekends, you can trade through the news, you can trade like a normal human being on those accounts. So there's that, okay? And it's a better way to learn. So yeah, have a look at those. Those will be fine for you. Yeah, Nick says a lot of prop firms won't let you hold a position overnight. And that for me is a prop firm that's just trying to make you lose. They're just trying to take your money. And I guess there's quite a few out there. I saw it in the beginning, which is what put me up against prop firms in the first place. I was like, these rules are ridiculous. They're just the odds are all stacked against you as a trader with those rules. So that's why I picked the ones that we're using, because they don't stack the odds against you with that. So that's fine. Will they be around forever? I don't know. Don't trust anyone. Don't trust a broker. Don't trust a prop firm. Just use it to your benefit and get your money as quickly as you can. So yeah, Albano. So these guys don't make you close your trades every night. You will get fees, but not out of your pocket, out of the account or whatnot. Just like any normal cash account. And the only reason I started playing around with these funded accounts is, like I said, is because I realized there's a gap in the market of people that don't have capital. So yeah, it's a necessary evil, let's say. It's one of those things that are relevant that you might need in the market. I'm so glad, Blue Mango, I'm glad your mortgage is safe. Oh, God, gosh. Yeah, okay. As long as you got in a good position in the gold, it's fine. I tell you what, Yeah, on Tuesday, Blue Mango was taking out the second mortgage on that. Yeah. You know, when I was younger, they used to tell me, Rob, don't ever borrow money to trade with, whatever you do, and don't use the credit card, and don't this and don't that. Trust me, when I was younger, I used the credit card. We didn't have leverage trading. So you don't listen. Nobody listens. That's what I was talking about right in the beginning of the video. Nobody listens. I've seen it. I've seen it often in the comments. Nobody listens. Everybody's got their own opinion, their own way of thinking, and it's quite crazy. People don't want to hear it. People don't want to hear it. They really don't. People used to tell me, "Oh, don't use that credit card. Don't borrow money to trade with. You're gonna be in trouble." Off to the bank. Where are you going to get capital otherwise? You know, when we were younger, we didn't even have the opportunity to have a prop firm or some cash leverage trading thing or whatever. That didn't even exist. We had to trade one-to-one, and that was it. Spot trading. That was it. There was nothing else. And the whole point was they were trying to avoid the set and forget scenario where you would buy in like we do now and leave the shares and forget about it. They didn't want you to do that. They wanted you to get in and out, because the more you get in and out of a trade, the more money the broker makes from the trades, which is why they came up with leverage trading, because then they make even more money because they know you're going to trade even more. Brokers are in this to make a profit. They're not in this to make it easy for you. Yeah. Certainly. And have I told you over and over again that 75% of leverage traders lose money? And we all think we're going to be in the top 25%. We start today, get into trading, we watch the video, we're going to get into trading today. We're going to win. We're going to be in the top 25%. Even though 75% of leverage traders lose, we're going to be in the top 25%. Even though of all those traders, 95% of them are institutional. Crazy to think, isn't it? Absolutely crazy to think. But yeah. Okay. I see a lot of you guys have joined the Telegram channel and you're having a lot of fun on it, chatting to each other and whatnot. I try and put stuff out there every day for you guys as well. Bit of fun. It's nice to have a crowd and to have people to speak to. So make use of it. It's great. And like I said, trading can be a very, very lonely place for people. And especially when you're losing. Oh, man. When you're having a bad week and things are going bad and you've lost a number of trades and you're all on your own and there's absolutely no one to tell or to lay it out onto or to talk to about it or to even ask, what do you think, you know? That's horrific. It gets to you. It really does get to your psyche sometimes. Even if you've been trading for years, it still gets to your psyche. If there's just no one to bounce it off and say, what do you think of this? You know, would you hold it? Would you let it go? You know, did I do the right thing? Whatever, you know. Egan's about to start his first funded account for the first time real soon. Good luck. Good luck. Hope it goes well. You know, most people actually do end up losing their first account. It happens, okay? Just deal with it. One of those things. But hopefully you don't. Hopefully you do well. I'm one of those people that tends to hold on to the accounts. I don't know why. But, yeah, it's much of a muchness. But hopefully it goes well. Hopefully it works out pretty well for you. How the real money is made. Put that as a title today. How the real money is made. With that strategy. Make money with a strategy. Have a business plan. That's the only way to make real money. Where's Shane today? I haven't seen Shane today. That's weird. He's normally around. Perhaps he's gone to bed in Australia. He's gone to sleep. That's the only thing with having different time zones around the world. We're all in different time zones, but we all tend to trade the American stock market. Have you noticed that? We all tend to trade with the USA. The mighty US dollar. Everyone trades with the USA. We trade a little bit in Europe. We obviously trade the commodities and all that, but the US dollar, oh, that's powerful, eh? It's really powerful. How's Bitcoin doing? Bitcoin is, yeah, look at that. It's had this downwards sort of move, and it broke through it, and it countered, and it went up, and it hit a resistance, double top, coming down again. So it's creating a new sort of level, and I think we can sort of take this out. We don't need that anymore. We've got a sort of a different scenario here now. It seems to be in this range here now. Let me just move that range down to a better level. Yeah. Seems to be ranging a little bit further down now, so keep an eye on Bitcoin. I actually was expecting it to go down to 90 the other day, but it did hold up. It held up quite well. Now see, the S&P 500 is about to break a level. It either holds that level or it breaks it. That's quite interesting, actually. Yeah, Brewman. Where's Brewman? What happened to Brewman, guys? Sure. I must be scaring you all off. Well, there must be another YouTuber out there that's better than me talking about trading. And that's okay. That's good. As I've always said, you can learn something from everyone. It doesn't matter who they are or what they're saying or whatever. Everyone's got a system. Everyone's got a strategy. And if you can learn something from someone and make it useful to yourself, why not? Why not do it? We learn something new every single day in our lives. And if you're prepared to listen and you're prepared to do that, you'll do well. I'm in the US, the Funded Trade Markets prop firm. Can I use that in the US on TradingView? The US does have a lot of problems with prop firms. You might have some issues getting around it. I think you might have to ask the prop firm how they get around it, because there are ways and means, okay? But yeah, you're going to have some problems in the US with prop firms and regulations and things like that. So just ask the prop firm how they get around it, because it's kind of an unregulated thing when it comes to that. So just check on that. Just check on all the rules in the US, because they got a lot of rules on trading to protect people from going bankrupt. So check it up. Make sure that you're doing the right thing. Okay. What was I talking about just now? Lost my train of thought there for a moment, but that's okay. It's bound to happen sometimes, isn't it? But yeah, people don't believe that charts cannot predict the market, and the market's actually a 50-50. There's a huge inability to listen and to understand when it comes to this, and people kind of stuck in their ways and convinced, and they don't want to actually understand that they're not looking for that shiny new tool. They're looking for understanding. They really need to find the understanding, and they're going from video to video, hopping along, looking for someone to tell them how to trade. But actually what they need to do is just understand a little bit clearer what they're doing, and trying to find the answers. And I think it's like that in trading, mainly because unlike becoming a doctor or a lawyer or becoming an engineer or whatever else, there you have a mentor, you go through an internship or an apprenticeship or whatever it might be, and you learn your trade, and there's someone there helping you along and teaching you, and there's usually a whole bunch of people around you helping you along and teaching you and shoving you along and showing you the right way and all the rest of it. So you most certainly don't have to go and look for your answers on Google. But when you're a trader, you kind of find you have to go and get your answers on Google. You have to go and get your answers from people in the know. And you're never quite sure what answers you're getting. But the initial psychology is to go and look for that shiny tool, to go and look for that indicator or that system that's going to make you the money. When what you need is just more understanding of the career that you're getting yourself into. One of the most difficult things I find people don't get is understanding that it's a career, understanding that it's something you have to learn, something you have to get to know. You have to kind of pay your taxes and learn, because with you being alone, you're having to teach this to yourself most likely, unless you're lucky enough to have a mentor that you can sit at a desk with. And that's why I say, some people said to me, oh, after 30 years, you suddenly make YouTube videos and start teaching people. Well, no, I've actually been teaching people my whole career. People would sit at my desk with me and learn how to trade. So, I did it for fun because, do you know why I did it? For company. Because it was nice. You had company and you could have coffee with them and, that sort of thing. And you had a friend. And it was always nice to know that someone was interested in what you were doing and they wanted to do it as well. So I've always been open to that. I've always been open to that with people. And then, now I can do it on a larger scale. This is great. Last couple of years, I'm doing it on a much larger scale, speaking to much more people and giving you guys all the information. And as I've said to you guys before, I'm not sitting here telling you about how good I am or how many great trades I made today or last week or how many bad trades, how much I lost, how much I won. I'm not here for that. That's not what I'm about. That's I'm just here to let you know how it's gone with me, how many mistakes I made and how many good things I did and how many things I learned in the market. And maybe you can get ahead by learning those things as well. If you understand the mistakes before they happen, maybe you can expect them and maybe you can get around them. You'll still make the same mistakes. Everybody does. I spent years believing that charts predicted the market. I spent years believing that win rates predicted the market and would make you the money. Because the natural, intelligent way to think is, if I win more trades, then surely I'm winning. That's the natural way to think. It's quite a shock to the system when you find out that that's not true. When you find out that, wow, that even though mathematically it sounds good, when it comes down to it, it's not true. You can win 9 trades out of 10 and still be losing, and you're like, but so that's where you've got to change your psychology, change your mindset around this, and figure it out. Your first pop count, as I'm currently 2K drawdown, I may have to go back to paper. Yeah, look, I had a bad week last week on this account. Whatever reason, we took some willy-nilly trades, we played around and whatnot. But we were up at 26K the other day, and now we're back down to 24. So we lost 2K on this $25,000 account in 2 weeks. We could make it all back in the next 2 weeks, or we could lose the account. That's trading. But at least you understand that happens with real money as well. And it happens with big money as well. But what you find as a trader with real money now is you put money into the market. So now you trade big, okay? So let's say you've got a lot of money and you're putting a $25,000 risk out there because you want to make a $50,000 profit at least, okay? And it goes into a loss, and it's $24,000 in a loss, and you make the age-old mistake that every trader makes, and you move your stop loss away because you think, I want to lose that $24,000. So you stay in the trade, draw down. Then it starts sucking you down, and you go $50,000 down, and you move that stop loss again, and you go $70,000 down. The age-old thing what usually happens is you get lucky, particularly on that one, and it turns around and it goes back up and it goes back up to zero, and I call it the relief trade, and you get out and you go, phew, got out of that one. It worked. Now your psychology believes in dollar cost averaging because you got out of that one, because that was a biggie. You got out of it. You didn't lose the money. It took you a month. Maybe it took you 2 months. And you sat in that drawdown and you didn't sleep at night. And you were sweating and you were thinking, oh, I've got so much money to lose here. Age-old mistake. Everyone makes the same mistake. But you get out of it. And you come out of it with zero. You don't make any profit. You make like $10 profit. But that's okay. Now you've got a win rate. Because your dollar cost average. So now you can boast a win rate because you won that trade. And now the next time it happens, you believe it's going to work. So you do it again. You do the same thing again. And lo and behold, it works again. It works again. Phew, relief, you get out of the trade. It's worked a couple of times now. So you think it works. Let's say you get to the fourth time, the fifth time, and you do it again. And then it keeps on going. That's the one. That's the one. I've seen friends, you lose everything because it's real money, huh? You know, where you sit in it, sit in it, and sit in it, and you believe it's going to come back. It just keeps on going. It keeps on going. It keeps on going. And because it's Forex, you believe it's going to come back. And a perfect example of that is the euro it was at 130 to the dollar at one stage, and the guy buys it at that level, and then it starts going down, and you think, it'll come back, it'll come back, it'll come back, it'll come back, and you keep on dollar cost averaging down. That went to parity. It went to 1-to-1 at one stage. Now you're sitting in this thing for a year. It's gone to 1-to-1. You're a couple of $100,000 down. It's never made it back. And you know that the question arises now: had you taken your stop loss, could you not have made that money back somewhere else much quicker, much easier? It depends how deep your pockets are as well. I'll check BTC. Let's have a look. And then sounds like, sorry, a YouTube trader removed their stop because she believed their trade was down 250K and a 500K account, and she lucked out, made 90K. That's an interesting story, Nick. That's I haven't seen that one. I do know who she is. I've seen her on YouTube. But that's interesting. I must find that. Is there a video on it? I'll have a look at that. That's quite interesting. But no, that's a fact. That happens. It happens to a lot of traders. I've seen it loads of times, but I've also seen this one trait: is you become confident in doing that. You become comfortable doing that. And that comfort zone destroys you in the end, because what actually happens, and I've seen it happen, is that one trade comes along and you think, well, the same thing's going to happen because what happened in the past will happen again in the future. That's what you believe. And since you've managed to have 3 or 4 relief trades, you'll be like, this is great. I'm good with this. I'm good. And that one takes you out, but it wipes you out. I mean, like if you had a 500K account, there are those trades that will take the whole 500K. So, you know, you watch out for that. Now, what I'm seeing here on BTC is there is a support level down here at the 106 level. It's heading down towards that. Hasn't reached it yet, but just be careful of this one small thing that I'm seeing here. I know it's not important or not that important, but it's important enough to just take note of. Is that breakdown? It does look like it's breaking to the downside again. Now, I wouldn't hold this as the most solid trend support in the world, but it's a trend support and it's broken through it. It's breaking down. There is a big green candle that came back just before that, and now it's coming back down again. I would be cautious of this on a long trade, and also you know, it's very, very close, very close to the support. Yes, we could pull the support further down, but what I'm seeing here is a double bottom there and another bottom. So that looks like a level of importance. I would wait until it goes below that level, but and then see at that level if we get a turnaround, if we get a green candle going back to the upside. So what I would do before I go long on Bitcoin is I would take the short-term level, which is that, and I'd wait for the green candle to break above it. If the green candle breaks above that level, then we can look at the long trades again on Bitcoin. So I won't get back into Bitcoin just yet. I'll wait for that just to give me a little bit of confirmation, and then we'll have a look at that. Okay. Well, at least, Nick, at least you knocked out and made 90K. Most traders, when they're that far down in loss, when they get back up to cost, they normally get out pretty close to the cost. You know, they'll back like $1,000, $500, $10 even, and just go, whew, I'm out of the trade. I didn't lose 250,000. You know, most people will do that. To be fair, I've done it as well in the past. We've all done it, okay? When I was younger and more stupid, I did it. And I had the relief. I know the feeling of the relief trade very, very well. Very, very well. But it was actually before I started preaching the strategy. It was before I had the aha moment of the strategy. The stop loss is important, the managing the risk. It was before I came to the realization that you can't time the market. And yeah, so I've been there, done it. I know the feeling, but it was a long time ago. I haven't done it again because I learned my lesson, right? I learned my lesson, and now obviously I have a different policy that I've had for the last 15 or 20 years on how to do it with the strategy and whatnot. So I don't make the same mistakes like that. I actually, I religiously stick to my stops, and I understand that what happens when you don't, and where it goes when you don't, and when you let these things run, what happens. So been there, done that, sold the t-shirt a number of times. I know what it feels like, but I see a lot of other traders doing it. Now, I've seen a lot of other traders do it as well. And I've tried to advise them and tell them, don't do it, rather take the small loss and come back. But then, you know, sometimes, like Nick says, sometimes, you know, the person has the luck and they make, for example, in this case, 90K. Fantastic. Absolutely fantastic. That's not always going to happen. Not always going to happen. Sometimes that's going to go pear-shaped in the most horrific way. I'll tell you where you might want to use an indicator. You know, somebody mentioned the volume profile earlier, and I'm not going to use a volume profile here, but what would be interesting to me is an RSI on the Japanese yen. There we go. And I think if the RSI gets up to 80 on the Japanese yen, you might be looking at a pretty good short trade. It's going through the 70 now. It's way overbought. Now this is when institutional traders are starting to look at this and think, maybe we should be shorting this. So, or selling it at least. Yeah, interesting. Way overbought. So that might be interesting. Might be an interesting trade. Let me take this out of here. I will put it back one day. Let me first get a trade, but I'll just wait for confirmation on a trade. We don't need those two lines in there anymore because we can clearly see that we've been scuttled. And now we can put a new level in. Let me just see this particular one. We can put a level across here. That's a nice, cute level. Okay. Is there anything above that? That looks to me like it's breaking out. I actually turn back right here. Let's just see what happens with this. That level is of great interest to me. Great interest to me. Because either it's going to break and go, or it's going to come back into this level and it's going to go down. And then it'll come all the way back down to the 152.5 or 153. Yeah, that might actually be a turnaround point. Let's see what happens here. That might be quite interesting. I'm going to leave those railway lines in there and keep an eye on it, because that might be a good trade. Might be a useful trade. Let's see. See if we get that. NASDAQ. If you like trading NASDAQ, just remember that the NASDAQ is baked into the S&P 500, but it's baked into the S&P 500 with everything else as well, and the Dow and all that sort of stuff. But you'll probably find that the NASDAQ drives the S&P more than most others. So if you look at the NASDAQ, there she is starting to come down as well. The NASDAQ is a bit more volatile than the S&P 500 or the US 500 or whatever you like to call it. But what I'm seeing here is the top level, and I'm seeing a gap that it would like to fill down here at 25.5. Most likely, I'm not going to draw this from the bottom. I'm just going to draw it here. I'd rather draw it through there. Yeah, there's your level. It's actually quite far away from there. But if I look at this, you see it's broken up, left a gap. There's a good chance that this could correct all the way back down here to the 25.5 level. But there's nothing confirming it. There's nothing here that says it's definitely going to happen. Apart from maybe what could have been a pincer top, but it didn't really give a decent pincer top there either. So what I would do with the NASDAQ is I would go and look at the S&P 500, and I would say, what's the S&P 500 doing? And the S&P 500 is giving me more of a signal that it could hit support and bounce, or it could break to the downside. Keep an eye on that, because that might tell you where this is going as well, because it'll give you more confirmation whether this is going down or up or down as well, because it will go the same way. So if you want to do that, you can use, for example, this S&P 500, and then you've got the US 30 as well, which won't really confirm much on the NASDAQ, but it looks like a similar picture to the NASDAQ. So what I would do is just watch the S&P 500 for a break through that level. If it breaks through that level, you're going to find the US 30 and the NASDAQ is also going to break to the downside and go. But at the moment, you can't call it. At the moment, it's not something you're going to call easily. It's going to be a difficult call. Would love to be able to call it right now, but a little bit hard to call. Okay. Not everything's easy. See, that's what the charts are for. You know, like somebody said, yeah, you say the charts, you don't need the charts, but then you go to the charts. No, you know, the charts, like I said, this whole video I've said, charts are your tool. They're your scalpel. Those are the charts are the thing you use. Just pick your trades and to pick your trades out and to manage them. That's all. Charts are there to manage the trade, just to try and work out where you want, what you want to do with the trade. That's all. They're not going to predict which way it's going to go. They're not going to predict how much money you're going to make. They're not going to predict if you're going to make the money or not. They're 50-50. Every trade you take on these charts, it's got a chance of going up. It's got a chance of going down. It's a choice you make. You look at the chart and you think, that looks like it's going up, so I'm going to buy it. That's about as much as good as it gets. Yeah. Currently, yeah. But the volatility, this big red candle on the S&P 500 and the NASDAQ, oops, that's a big one. That is kind of kind of concerning with regards to anyone who's long. I would look at it and think, if somebody said to me now, you're going to take a long trade or a short trade, I'd probably guess towards the short side, but it would be a wild guess. I'm just looking at these candles and thinking they look very bearish, and you know, there's big red candles pushing down here, and they're pushing down to lower levels, and but yeah, just a bit of volatility, and it is sitting on that support, so it could easily bounce. I'm actually surprised because there's a lot in the markets in the news that looked positive. You know, it looked like Trump was making deals with the Chinese government and all the rest of it, and Nvidia's flying to the moon, and it's just kind of strange that it's showing that sign of weakness now, but it's all to do with the movement of the money in the country and the way things are flowing and all the rest of it, but not much you can do about that. Dum, 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 dum. Who's still got the gold trade? Gold is just sort of hanging around here. It's looking rather ominous for a short more than a long. Because while it looked like it had recovered, now we can move that out a little bit. And that suddenly changes the whole picture. Yeah. This is suddenly starting to look a little bit ominous. So perhaps, yeah, look at that. Gold is starting to look kind of short. Yeah, I would say if it breaks below that red line and goes again, this head and shoulders is still in play. It hasn't broken the shoulder. And this is a bearish trend down the side here. There's a good chance gold could still go crashing down. But in that situation, if gold's going to go crashing down, isn't the S&P 500 going to go long? Yeah. So. Hello, Matthew. I'm still short on. We're holding the VIX, Nick. Say long volatility. Yeah. I'm going to make loads of money with long VIX. That's for sure. The VIX makes a fortune. Yeah. Oh, what a pleasure. Sir Lancelot. There you are. Good to see you. We were just discussing earlier, where's Shane and where's Brewman and there's Sir Lancelot. Good to see you, man. 39.87, eh? Let's have a look. 39.87, gold. Oh, you haven't got much room, but yeah. It stays below that, you're looking good. But, you know, a nice red candle here would be nice, especially through that red line there. That would give us a nice downward spiral move. Let's just take this and move it to there and say if you get a trade at that level there in the green, that would be nice. That would be a nice trade. That will be a decent trade, yeah. Then you can write this down. There's a big hole here, eh? Big hole down here. So if you do get the trade, it'll be nice. Look, we took the trade on Tuesday when it was below there. We took the red candle and it was down and we thought, that looks great. That looks like the trade of all trades. But it didn't work out and it went back up and it went along here. Maybe I put the stop loss too close. I don't know. But I think with the red candle down here, we might get a nice short. Maybe I'll put the stop loss a bit further out this time. We'll see. But yeah, it is what it is. It is what it is. Okay. Right, so gold, we're looking for the short. Yeah, Australian dollar, US dollar is still short, eh? I mean, yeah, don't come back on me now. I'll rather stay there. Cool. Now you've got it. The random coding channel has just come up with the answer. Well, there you go. You said it feels like trading is kind of guessing. I'll repeat that. It feels like trading is kind of guessing. Does that not sound like me saying trading is a 50-50 game? Does that not sound like me saying you don't know if the markets are going to go up or they're going to go down? You don't know. The charts can't predict the future. You can't predict the future. No one can predict the future. Why do we have charts? We have charts so that we can manage our trade, so that we can find a trade to manage. And we look at charts for what they did in the past, and we hope and we pray that they're going to do the same thing in the future so that we get on the right side of the trade. Okay? Does a win rate make you money? No. Does consistently make you money? No. What makes you money? The strategy. Because trading is guessing. Let me tell all of you right now that if you had a coin and you didn't use this system, you didn't use this system at all, you just looked at a trade and you said, here's the Australian dollar, US dollar. Should we go long or should we go short? Toss the coin, heads or tails. Boom, lands on heads, we're going short. That's it. That's your trade. That's trading, right? It's 50-50. You don't know which way it's going to go. We think we know. We think we've got this taped. We think we've got this whole charting thing worked out. But it's guessing. You are perfectly right. And the fact that you brought it up is fantastic, because I'm so glad you brought that up, because that is so important to understand that trading is 50-50. It's guessing, okay? This is all guesswork. There's no facts about the future. There is facts about the past. It's easy for me to go and do a rerun and go back here and say, well, I would have gone short there, I would have gone short there, I would have gone short there, because I know which way the market went, don't I? But if you ask me now, I can't tell you. What's my best guess? My best guess is it's going short. Why is my best guess that? My best guess is that because it's in a range, it's happened before, there's resistance, and all the rules that we've put forward that we trade with. But the only way that we can make any kind of profit out of this is by having the strategy of losing less on your losses, making more on your wins. And that's where the aha moment came to me so many years ago. And I do believe that the random channel has just had the aha moment as well. It came to me many years ago when people said to me, you cannot time the market. The only way you can invest in the market is time in the market. And as I said then, I can't wait for 30 years for my money, which I am now, because it's invested, but no, it's okay. But at that time, I was impatient. I was like, but I want to make money today. I want to make money now. I can't just put the money there and go to sleep and watch it doing nothing. And I started thinking, if there are institutional people out there trading with huge sums of money and making a profit, for example, the turtle traders, good example. I'm pretty sure that Morgan Stanley doesn't lose money, okay? If they can do it, then there must be a way. There has to be an answer to this question. And because if trading is guessing, then how are they doing it? How are they getting through and making a profit? And that's when I started figuring it out, started doing my research and trying to work out how you get around this. Because obviously it's not in the charts. And then I figured it out. I got lucky. I figured it out. It came to me. And well, look, it didn't just fall out the sky and whack me on the head. Obviously, a lot of research, a lot of looking around, a lot of information. I mean, I read a little bit about the turtle traders and all that sort of stuff. I mean, that information is very, 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 very relevant. That kind of stuff. And how do the institution... The big question I asked myself, when it happened, is how do the pros do it? How do the guys sitting on the trading floor, how do they do it? That's what I needed to find out. That was the most important thing for me to find out. How are they doing it? And that's when it started to work it out for me, because that's how they do it. That's effectively how they do it. So yes, trading is guessing. Okay. Yesterday I traded gold. I sold, and then I was listening to one of my mentors to buy gold. Coached one of my accounts because of crashed one of my accounts because of this guy. So I learned to listen. I learned never listen to others. Just make your own decisions. It feels better. Don't listen to others. You are perfectly correct. And as I always tell you guys, even with myself and all the other guys online, I say to you, take whatever you can from everybody's information, systems, strategies, whatever, and use it to your benefit. Use it to make you a profit. Use it in your system if it works for you. If it doesn't work for you, chuck it in the bin and find something else. Okay? You can't take, for example, my way of trading and just trade that way, because it might not work for you. You've got to figure it out for yourself, and you've got to work it out for yourself. But by the same token, you can come along for the journey, and you can learn, for example, from myself, all the mistakes that I've made in the past and all the things that I've done in the past. And maybe there's a lot of stuff in there that will be useful to you. I don't know, maybe not. But if it is, take it, use it. By all means, take it and make it work for yourself, because that's what it's about. And but yeah, I don't want to tell somebody you must trade gold or you must take. For example, this was my trade of the day: United States dollar, Australian dollar, United States dollar. This was what I picked. Okay, but I'm not telling any of you to trade it. I'm saying it's what I want to trade. This is my trade of the day. This is what I'm looking at. And if you guys want to look at it, and if you feel the same way about it, by all means. And I've seen a couple of you guys here even turn around and say, I'm picking that, but whatever I pick, go the other way because I'm always wrong. So, you know, that's what traders are about. I'm going to say to you, this is what I'm looking at. And we can talk to each other, and that's fantastic. That's what it's about at the end of the day. It's about a little bit of being able to bounce it off someone else. Because if I choose a trade, that doesn't mean I'm right just because I've been doing this for 30 years. I mean, I've had so many people with their jobs come to me and say, oh, I've been doing this for 50 years. But, I mean, you're still doing it. So, you know, great. Wonderful stuff. Doesn't mean you're doing it well. Doesn't mean you're doing it good. It doesn't mean I'm a great trader. It just means I've been doing it for a long time and I've made all the mistakes that everybody else has made. So, you know, for me, if I can bounce it off somebody else as well, I've had people that I've taught to trade and I've bounced stuff off of them and they've come back to me and said, but Rob, did you see that? And I'm like, oh, I didn't actually see that. Well spotted, you know. That they actually better than you know, or they know just as much as you do. So it's great. It's absolutely fantastic. That's what it's about in every sense of the word. You know, being a doctor for 30 years doesn't make you a good doctor. It just means you kind of know the trade, you know what you're doing. You should be able to find your way around the operating theatre. Yeah, okay. The guy who's 25 years old might be better than you are. I don't know. Maybe, maybe not. But, yeah, that's it. Even if I make my own decision, I found I'm happier than listening to someone else who says buy now and sell then. Yeah. The trader, as Nick says, the only control the trader has is actively managing the trade. And I totally agree. Totally agree. The only thing you can do is manage the trade that you take. You can't predict which way it's going to go. You can only manage it once you're in it. So once you're in the trade, you can be like, ooh, what do I do now? You know, actually pick which way it's going. That's insanity. We can't do that. We're not fortune tellers, are we? We can only do what we can do. We try and pick the best trades. We try and pick it the best way possible. We try and have the best systems possible to try and steer us in the right direction and give us some kind of an edge. But at the end of the day, you don't really have much of an edge on these charts. All you've got is your strategy, which will give you that edge. And I agree with Random. If you make your own decisions, you're going to be streets ahead. Because if somebody else says to you, you should do that, and then you do it and it goes wrong, you're going to be peeved. But I mean, that's another reason I don't tell you guys do that. I give you guys the option to see what I'm doing and decide for yourself if you want to do it or not. If you think I'm doing something stupid, you're welcome to tell me, no, Rob, don't take that trade. That rather don't. You know, that's fine. We all do that. But I won't tell you to take that trade, because that's up to you. You need to find your own way. You need to find your own system. I do put out the trade of the day, and I do put out the trade information for those guys who would like to see what I'm doing. And the reason I do it is so that you can look at my trades and say, okay, that's what you're doing. And let me have a look at my analysis and see if it matches yours. And if it doesn't, then I can ask questions. Why doesn't my analysis match your analysis on this trade? You chose this as trade of the day. You said that the Australian dollar, United States dollar is going to go short today. And I said it's going to go long. So I'd like to know why your analysis says it's going to go short and mine says it's going to go long, because I just started trading this week and I'd like to know where I'm going wrong. That's what it's for. It's not to say to you guys, you must take that trade. Don't ever get caught up in that. Because you should never, how can I put this? You can't go on a recommendation in the markets. Never go on somebody else's trade. Never go on someone's recommendation. There are no good recommendations in the market, because the market's 50-50. The market's always 50-50, and we're always going to get it right and wrong. Okay. Exactly, Fani. You can listen to somebody as long as you take responsibility for your own decisions. For example, I'm blaming Fani wholeheartedly for the short trade on gold on Tuesday. It's all your fault. Nope, you actually told me to go the other way. No, it's your own decision. You make your own decision. You know, somebody spots something and they say, that's the perfect trade. And you go and look at it and you think, it's good. I'm taking it as well. And you take it, and then it goes against you. You can't blame somebody else for it. You can't, you just accept it. You decided that it was a good trade as well. And that's it. Yes, that's it, Random. That's the way to trade, okay? You look at the higher time frame, perhaps the day and the 4 hour, okay? And if it shows, you said here, it's showing, it's showing down. So it's showing bearish, right? Showing bearish, okay? So it was a NASDAQ, showing bearish. So if it's showing bearish on the 4 hour or the day, and then you go to the 5 minute and you start trading long trades, understand that you're trading against the waves. The waves are coming in and you're just punching against them, hoping you're going to get over them. But if you trade with the flow, there's a good likelihood that you'll get better trades. So what I would normally do when I was trading the 5 minutes, and I don't do it anymore, and I don't trade the 5 minutes anymore, but when I was trading the 5 minutes, I would look at the higher time frame and say, right, that's bullish or bearish. So that's like, in that case, bearish. So on the 5 minute on that product, I will only look for bearish trades, because the 4 hours bearish. So I'm going to look for bearish trades on the 5 minute. And then you actually get the majority of your trades will do better, because they're going with the flow, the main flow. That's the trick. Okay. Yeah. Guys, on that note, I must actually be on my way. It's getting quite late here. It's been absolutely fantastic. It's been a wonderful trading day with you guys. It's always fun having you guys here and chatting to you and getting to know you and all the rest of it, as well as having the Telegram channel. That's also a bit of fun. That's also great. We have a lot of fun on that as well nowadays, and we chat and we post things and what have you. Very nice. And at least we don't have a whole bunch of scammers on there trying to, copy us and use my face to try and sell you something or whatever. I did notice on YouTube there was someone who took my face and copied the name of my channel and put it in a comment somehow and tried to get people to WhatsApp them. Be careful of that. Make sure it's me, because I don't generally do that. And if I comment, I don't generally put 1 million little hand signs and things and whatnot all there. Trying to get you to contact me, I won't do that. Okay. So yeah, that was a bit odd, and I was strange to find it on YouTube. I reported it, and that was that. Guys, on that note, thanks for being here. Thanks for watching. Thanks for joining us. It's been great. I want you guys to make lots of money. Have a good day, and have a great day tomorrow trading, and then enjoy the weekend. Have a lovely weekend, and I'll see you back here for next week's live show. We'll talk a little bit further. Have a fun. Have a good day. Cheers. Ciao, and bye.